Good afternoon, everyone. Jason here. Today is February 16th, and this is your aftermarket update. So what I like to do normally during these video reviews, I like to come on here and talk to you a little bit about the trading day, kind of maybe review a setup that we had. That typically what we like to do is I like to show you the one setup that provides that really strong trade, so that you can see how we get into a position and why we get into a position, and maybe the process of managing that position. Today, I had a little bit of, first of all, I had to cut the day short. I had a presentation that I had to do at 10 a.m. Central Time today, and so we had a hard stop time at 9:45. So I was going to be taking maybe one or two trades, and that was going to be it today. Also, we were in the middle of contract rollover period, and we had just rolled over the halfway point on the CL contract. So that always makes me a little bit leery as well, just based on the fact that contract rollover can be a tough period. So really what today's video is going to be is I'm going to show you what tough luck looks like, what it looks like when you have some bad luck. And that's part of trading. And so one of the things that we try to do in here is we try to provide you with some transparency and provide you with what a day looks like when it doesn't kind of go in your favor. So I didn't have a losing day. I just had a tough luck day, and I'll explain what it is that I mean. So as we were entering into our trading day today, I'm going to show you, I'm going to pull this over in front of you. So we create, if you become a member of the Oil Trading Group, you get access to this back office page, and we have all of our tools and indicators here. And we have what the CL trade plan, and then you click that button, and a tab like this will pop open. And so what you do here, what we look at really kind of the top of the trade plan is what we think about the direction or the bias of the particular session is going to be on a particular day. And then we give you a chart explaining kind of why we look at it in a certain way. So the session bias, choppy to sideways, we talk about the market present difficult trading conditions, and opportunity exists on both sides. And you can see here from this daily chart why we feel like this was going to be a choppy type session. We are in this narrow range here, dating back all the way into mid-December, and we've been just kind of back and forth. So clearly, the trading conditions have been choppy rather. And so what happens in choppy trading conditions is you find places on the chart like retracements where you look to get short, or if it's been going long and it pulls back to the bottom of a range, you look to go long, right? That's the best way until proven otherwise to play choppy conditions, right? Sell tops and buy bottoms. All right, so we had a trade plan idea here. If you can see this right here, we were looking for a move down to up to 53.59 to 53.79. So the bottom of that box there was 53.59. This was kind of the top of our range. We were looking to fade short into that area. So that was trade plan idea number one. Also, an unrelated level measurement came to pass here today. And so this red line represents a measurement that we use here at the Oil Trading Group. And you can see that level was right here at 59. So as the market rallied up into it, we were looking to get short into this zone. Now, if you were to spread this chart out, in fact, if you were to bring this time frame down, let's bring it down to 3 minutes here. All right, and we'll come back this direction. And you can see right here at the open, as the market opened, you had a triple bottom here, and then you had a very aggressive rally into this zone. So what you're going to see me do is you're going to see me try to get short right here. In fact, we double topped right here on this 3-minute chart. It went up, double top, began to sell off just a little bit, and then we have, of course, had this big, giant move to the downside. So what I was trying to do is get in short here at 59. I started at 60, then I moved it to 59. I was hit but no fill. Moved it down until we got to like 56, and all along the path I was hit but no fill. Now, that's the bad luck. So the video today that I'm going to show you is about 6 minutes of me going hit but no fill, hit but no fill. Let me move it down. Hit but no fill. It's that kind of thing. And so I just want you to see what something like that looks like. It's pretty frustrating. It lasts about 6 minutes. You can fast forward through it if you want. But I think it's important that you see exactly how these things occur in the live market. Even though I had the right idea, I did not get paid on it because of the way that the market unfolded in this particular instance. It happens. It's the way it goes. So, but that's the bad news. The good news is we were right in where our ideas were. So 53.59 made the low down here at 52.68. So basically, essentially what we did, and you can see there was a nice rally. There was some OPEC news today. We had a nice rally back up almost to the high. But essentially what we did today is we sold the high. And this will be day 3 that this particular setup, which I offered to you, by the way, in the $47 extended trial, this particular setup provided you with the third day in a row of calling market tops, right? So this is Thursday. So Wednesday and Tuesday, this particular setup called market tops, so we were able to get short out of this zone. There were guys in our trading room that was actually filled here. Now, this ran all the way down to 68. My target wasn't going to be there. If you take a look here, my target was this level right here at 22. So 59 down to 22 is 37 ticks. What I would really like to be doing today here is saying, hey, look, we had this, we sold the top, but we got our target at 22, and it was 37 ticks times 2 lots, which is $740, and boy, isn't that cool. Sadly, that's not what happened. So what I'm going to let you do here, it's about 6 minutes of hit but no fill, hit but no fill. You can watch that, and you can bang your desk like I was here today as well. I'm saying that with a smile on my face. I actually wasn't literally banging the desk, but I certainly felt like it. So one question that did come up, and you may ask this yourself as you see this thing occurring, why not just jump in, right? Why not go ahead and mark it in on a position like that, right? Well, and that's a really good question, and you have to make a decision when you're faced with things like that. You could mark it in, but you have to remember the context that this was happening within. This is a triple bottom. We get to the open. Market is heavy rally to the long side. You're really standing in front of a fairly aggressive 3-minute bar, and then it does end up flushing out. So you remember on the trade plan, I said they could go up as high as 79. Also, you had your daily structure target here at 64. So there was a real possibility that it could come up into it here. And as you're watching this thing hit 59 a couple of times, there is quite a bit of volume right underneath it. That looks like it's going to provide some support and lift on up through. So the reality of the situation is you could have. I didn't. In retrospect, do I wish I would have? Sure. One of the things that can happen, though, when you start marketing in like that, especially on a market that is as volatile as oil, is you can get a lot of slippage, right? I've been slipped marketing in on the CL as many as 10 ticks before. Now, that doesn't happen all the time, but it has happened to me before where I've tried to market in on something that was moving and I've gotten slipped 10 ticks. And so what we're trying to do is cut the losers short, let the winners run. And a 4 or 5 tick a 4 or 5 ticks worth of slippage can really make a big difference in your stop placement and some of those kinds of ideas. So the bottom line here is this. I did not mark it in. I missed the opportunity today. And while that makes me feel bad, right? I wish I would have made the opportunity. I'd love to be coming on here telling you today that we had that great opportunity. I still feel okay because in the end, my information was correct. The way that I see the market was correct. And at the end of the day, that assists and helps me with my mental capital as we head into the trading day tomorrow. So you're going to watch 6 minutes of me going hit but no fill, hit but no fill, hit but no fill. And that's part of trading. But I do want you to see that because, again, we like to come on here and talk about when things are all peachy and great. And they don't always work that way in trading. So I'm going to let you watch the hit but no fill 6-minute quote-unquote trade of the day video. So without further ado, here is that video for today. And there's hit at 59. Stop is 71. You've got liquidity underneath you at 58. I'm just going to leave it at 59 here. La 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 la. Man, that was hit but no fill at 59. I said 59, didn't I? Ha! So here you go. We'll see. Still 59 short. Still looking short at 59. You got filled? Okay. All right, Gibson, your target is 30-ish underneath you. And if we get to 10 ticks, I would be protecting. So now you've got 260 short at 55 now. Yeah, you got 59. That's good. Good, Lucia. We're glad you made it. Ray, I see your question up there. Just give me just a second here as we kind of manage through this process. Golly. So if that was it, I'm not going to chase this down because it's a pretty aggressive move up. Yeah, I'll get you before we head out of here. So you still have liquidity up there at 57. This will be a bomber if I get hit but no fill and this thing takes off. And it's just in this zone here where I need my stop to be at that 71 because of all that liquidity at 70 and 71. It probably should be at 72 to be honest, which is preventing me from wanting to chase it to the downside here and just put in down here, although I may. All right, I'm going to bring this to 57 on the entry. 57 on the entry. There's hit but no fill at 57. Hit but no fill at 57. Hit but no fill at 57. And the next thing you'll hear is the sound of this big, heavy computer landing into the pool right outside my window. There's 57, hit but no fill for the third time. And now you have 218 short at 57. There's hit but no fill a fourth time at 57. Unbelievable. 56 is the entry. 56 is the entry. And the stop at this point is going to be 66. And then I'll take my chances with it. There's hit but no fill at 56. That's the last move, by the way. I'm not, just what it is. There's 56. I was hit but no fill now 2 or 3 times at 57. And once at 56. And there's, you know what's going to happen here, right? When it does pass through and fill me at 56. Golly, 55. 54, 53. Son of a gun. And now that big line of liquidity is following it down. All right, I'm going to go now one more time. One tick down to 55. All right, take it off the chart. Take it all the way off the chart. Sugar. All right, so no doubt you were as frustrated watching that hit but no fill fest as I was participating in it today. You know, it was a bummer, there's no doubt, but it's part of trading. It wasn't a loss today, so if the number one objective of a professional trader is to protect capital, we certainly were able to do that today. And we didn't chase, and you know what? It ended up running all the way down to several of these different levels that we have. But in the end, we tried, and we will live to fight another day tomorrow. So tomorrow we'll be trading the April 2017 contract. So we'll be making that switch tomorrow as we head into the long holiday weekend. So as always, I want to say thank you for watching the videos here at the Oil Trading Group. And until next time, I want to wish you good luck and good trading.